All right, guys, so in addendum to last week's technical analysis on gold, obviously there's been some big developments since then, and I want to go over why the long-term chart on gold is not necessarily broken at this point. So if we look back here, and obviously I spoke on how I believe that we're in somewhere in this range of the cyclical bull cycle, which would be akin to 2008, that pullback right here, which then took us on to massively newer highs. And so if we just analyze that a little bit closer, we can see that here in September, we had this little test candle, which tested the previous pivot all-time high. And then immediately after that, we pretty much negated that on the monthly chart. And we tested this stronger level of support. You see all this consolidation here, all this accumulation of institutional money. Just a little tested that, and we made a lower low. And then after that, that's when it was sort of basically blast off. Well, as ugly as the recent price action has been on gold, it's not unlike what we saw in 2008. So back in March, we had this test candle of the previous, really the breakout level, and you can actually see it a little bit better on the weekly chart. These little tests here, this was the W bottom, and this was the initial low. So it wouldn't be out of the question that, obviously history doesn't repeat itself, but it rhymes often. Obviously it's not a perfect thing, but it wouldn't be surprising if we made another low on the monthly chart and took out this 20 moving average perhaps. Back here we took out the 20 moving average. So you see that there, and then we were able to reverse higher. It's not completely out of the question that, this chart isn't necessarily broken. Granted, it is very bearish short term, but long term, it's not out of the question. Now, several things that need to be pointed out here. You made a higher high, made a higher nominal all-time high. The last time you did that in this cycle, right here, you took out the 1980 high. And what happened? You came back down, retested this pivot, and closed below the 20 moving average. And it looks pretty bearish. If you look at this on a smaller time frame, let's look on the weekly here. You pull it back. You broke through all three of the major moving averages. The only one you didn't break through is the 200. So you gave way to all three of them, and this chart did not look good. This looks like a pretty bad reversal. But then obviously price reversed higher and resumed. And the other thing that you really have to pay attention to is look at the trend here. Trend is up. You see the spacing between the moving averages? There's lots of spacing here. Your spacing between the 50 and 100. 20 is above the 50, 50 is above the 100, 100 is above the 200, and spacing is now building between the 50 and 100, and spacing is built between the 20 and 50. Now, I talked about how it's different from 2011. Well, another thing that makes it different from 2011 is the extension from the 200. So if we look here, notice how extended you are from the 200 moving average here. Well, in order to even see that on this chart, or where we currently are, we have to make all this room on the top of our chart here. And you see where we got to in August. It's not even close to how extended we were in 2011. It's actually a lot more like this, isn't it? It's a lot more like 2006. So this chart's not necessarily broken, and it's just going to take some consolidations and backing and filling in order to get through these highs. This is all-time highs. It's a major level. It's a major commodity. Gold has the largest market cap out of any asset in the world. So it's not like it's an AMC or GameStop where somebody can just push it through with a gamma squeeze and knock it up 300% overnight. Also, taking a look here, notice the time count here. So you made this all-time high, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, and then 19 you broke through. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we have some more backing and filling to get through this. Also, I want to point out the same thing on silver. You guys know I've been talking about silver just needs to consolidate to get through $30. And I think people are getting a little ahead of themselves. When I say it needs to consolidate, I mean it really needs to consolidate. If you look at what it did in 2011, 2012, you got all the way down to 26 here on the big flush. And then from there up until April of 2013, you stayed in this range. So you had like 19 candles of consolidation. Well, currently we're at, 3, 6, 9, 10. We're at 10 candles right now. So we have a lot of more backing and filling to do. Also, look at the 20 moving average sloping up. That's going to be the catalyst. It's going to take a while. It might not be until close to year end that silver really pushes through. Like this type of consolidations, that's a lot of institutional money. That's a lot of money that it has to consolidate through, and there's a lot of money to be accumulated through before it can actually get through that. And I think that people get ahead of themselves when they see these patterns. And don't get me wrong, this is a great pattern. I mean, I love it. Look at the the higher lows, and nice thrust up. It's overbought. It's working off the overbought condition. It's making higher lows. It's consolidating. It's great. But I think people get ahead of themselves and they don't really look at the big picture. Like there's a lot of consolidation that needs to be done. So, by the way, I really do like silver here. Silver is holding up really well, and if anything, if that's any indicator, for the gold market, it's definitely a positive one. The recent price action in gold is pretty bearish, but silver is actually holding its own. So that could be a signal for gold that it's not necessarily dead yet. And yeah, like history shows that as I just pointed out. But yeah, obviously near term, gold's under a lot of pressure. But that does not mean that the long-term trends are not intact. And again, the chart of silver is actually really good. Like it's really good. It just needs to do a little bit more backing and filling. And on the monthly time frame, really just waiting for this 20 moving average to slope up and meet price, and that will act as a fuse for the price of silver. But yeah, I just wanted to give you an update on that because I know everybody's really concerned with the price action recently in gold, and I myself, not going to sugarcoat it again. Like it was a pretty bad beatdown this past week, and the bounce was pretty uninspiring as well. But that does not mean that it is broken long term. I just want to make sure everyone understands that. So we'll see where things go from there and where we trade moving forward. Anyway, guys, take care and have a great rest of your day.